Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague
Yatin, Mota.
And as you can see, both of us are cheering for the big match tomorrow. Big contest between India and Pakistan, of course. And we are cheering for the men in blue here. Yatin, expected to be a high-octane battle.
Absolutely.
Every time we meet with Pakistan, of course, there are sentiments involved. And, that's what, we'll be watching out for as to what are men in blue or what kind of strategy they adopt, given the fact that, Shubham Gill may make a return after, his, ill health. But, he was spotted practicing in the nets, and there are hopes that he is going to join back and play the match tomorrow. But of course I'll be rooting for my favorite cricketer Virat Kohli. What will you be watching out for from the match tomorrow?
So let's see whether or not Hardik Pandya is in control, and what kind of a game does he play, because in the past few matches we have seen that he has been a clear star performer. Nevertheless, the markets also have been cheering the India-Pakistan match. From the days low, we have managed to recover a lot. In fact, we managed to recover almost 120 points, Nandita, from the days low, clearly showing the kind of resilience and buy on dip strategy that is clearly working in the marketplace right now.
That's true. I think for the week as well, we have ended in the positive zone, somewhere around 90 to 100 point gain on the Nifty when it comes to the weekly action, right? If you look at, what the street has really done today, the Nifty has shut shop around that 19,750 mark. After even slipping below that 19,700 mark. Autos, Realty, FMCG, these were the pockets that did well today. But what didn't do well today was, as expected, the IT pack, given the fact that we had two big earnings come in after market hours yesterday, Infosys, and the surprise cut in guidance did sour sentiment when it comes to the entire IT pack. But HCL Tech, mind you, held out. We'll be talking about that in a bit. And banking was another pocket that didn't do all that well and kind of spoiled the mood on the Lal Street today, because UBS has downgraded both SBI as well as Axis Bank. Because of that, the entire banking pack was under pressure. And of course, Street is also now waiting for the HDFC Bank numbers, which will be declared on Monday. Aside of that, if you look at the individual movers on the Nifty, Tata Motors accelerated, and how in the last hour of trade, I think it was up somewhere around nearly 5% or thereabouts. You have HCL Tech that was the among the gainers today, defying what's happening in the IT pack. IndusInd Bank, Tata Consumer and Nestle were the other names that did well today. On the losing end, of course, on the back of the UBS downgrade, you had Axis Bank and SBI. Those were the top losers. Infosys post the guidance cut, Wipro and Dr. Reddy's from the Pharma pack as well. But Yatin, quite a few movers as usual in the mid-cap end of the markets today as well.
Yes, absolutely. And if you look at IRCON and GSFC and MMTC, RITES, all of these PSU stocks were clear gainers on the Nifty 500. In fact, RITES and IRCON, both of these stocks, after getting the PSU Ratna status, moved up in trade. Also, what was not doing well in trade was the likes of Emphasis, Bandhan Bank, Infibeam. All of these stocks were correcting anywhere between 4 to 5%. But if you look at the small cap index, we had stocks like Metropolis doing well. Stock was up 3%. SJVN making a comeback after the OFS. That stock moved by nearly 3.5%. And a whole host of mid caps showing some bit of specific action in trade. In fact, if you look at stocks like SpiceJet, that stock was up 20%. Ceylan Exploration, the stock was up 5%. High Tech Pipes, the stock was up 10%. Yatra, recently listed stock, that stock was up nearly 7.5%. So stock specific action continues on the Lal Street, irrespective of what's happening in the large cap markets or on the Nifty Bank Nifty.
All right, since you mentioned Nifty Bank as well, of course, let's talk about, what happened with SBI, among the top laggards today. This is the first stock on my radar this afternoon. UBS has downgraded the stock, in fact, from buy to sell. Now, this is the first sell rating for the lender, and the target price has also been cut by quite a, significant amount, 740 to 530 rupees. If you look at, what the report says, it says that the best of financial metrics may be behind for SBI. In fact, UBS also says that return ratios may already have peaked in FY24, and from FY25 the return ratios could actually decline. And of course, the street was anyway anticipating that the deposit repricing will have an impact on margins for most of the lenders. So that is also going to play out. And UBS says that the NII growth will be in line with somewhere around 11 to 12% of loan growth. UBS also says that there could be a rise rise in retail loan delinquencies. Remember, RBI governor had also flagged off that there has been an unprecedented rise in personal unsecured loans rather, and RBI had in fact issued an advisory to banks as to keep a check or keep an eye out for the kind of rise or that has been seen in the personal loans. So that's something that UBS has taken a cue from, and and that's also one of the factors why UBS has downgraded SBI. In fact, RBI had also, as I mentioned, had flagged off the risks here, which UBS has taken a cue from. But UBS also says that valuation wise, SBI trades at one time FY25 price to book value, which does not appear very expensive. But the expected decline in profit is something that could result in more downside pressure for the stock going forward, Yatin.
Absolutely, and if you look at the overall banking sector, that was under pressure, but it managed to recover from the day's low, Nandita. Obviously, a lot of flows in the banking space moves from the institutional side. So I think irrespective of this report, overall we had some recovery from the day's low. Now, if you look at the other stocks which were in focus, HDFC AMC was one of the top gainers in trade today, moving by nearly 5% intraday. And we have Jefferies, which has raised the target price on HDFC AMC to a level of 3250. Now, obviously, the target has been increased from 3000 levels to 3250 on the basis that the earnings for AMC companies should do well. In fact, HDFC AMC and Nippon AMC, both of these stocks are at fresh 52-week highs, clearly indicating that the kind of SIP and the equity cult that we have seen in India and the collections of the mutual funds have been rising steadily. Now, the profits for the second quarter rose by nearly 20% to 440 crores, slightly ahead of estimates according to Jefferies. However, they say that HDFC AMC will benefit from the larger branch network expansion of HDFC Bank, and with the merger between HDFC and HDFC Bank, probably HDFC AMC like businesses will benefit because the cross selling opportunities really increase post the merger. Also, they have increased the 3 to 4% earnings estimates given the fact that the equity AUM for these AMC companies have been on a steady growth path.
All right, the market share gains coming in there for HDFC AMC, and of course the street has cheered that, and that's visible in the stock prices as well. But let's talk about the other stock on my watch list today, that's HCL Tech. Of course, yesterday we saw the company coming out with muted sort of revenues, and we also saw a cut in guidance, but the margin guidance was maintained, and the commentary was pretty comforting, and that's visible in the stock prices today as well, given the fact that it is among the top Nifty gainers, even though the IT pack is reeling under pressure. Let's see what the brokerages are saying about HCL Tech. In fact, Citi has a neutral call, target price of 1295 rupees per share. It says that the cost controls that the company undertook in Q2 is boding well, and of course that was reflected in the margin expansion as well on a quarter-on-quarter basis. The guidance cut seems to be disappointing, of course, but the fact that the guidance cut has been announced on the back of the weakness that was already seen in H1, because H2 is expected to see some recovery, because the management focus will be on recovery in H2 vis-a-vis what the other IT giants have done. They have cautioned and they have a hazy outlook for H2, wherein HCL Tech has said that all the the revenue impact of all the large deals like Verizon as well as ASAP acquisition is something that will start reflecting on revenues from this quarter Q3 onwards. So that's been pretty comforting. In fact, another thing that I want to highlight, Yatin, is the fact that HCL Tech has a higher exposure to cloud, which mostly comprises non-discretionary spending, and that's something that will work in favor of HCL Tech, and that is why analysts and experts believe that HCL Tech is better poised to see a recovery if you compare with the larger peers like Infosys as well as TCS. And I was talking to Siddhartha Khemka of MOSL in the morning, and I was asking him which stock do you think is looking better now. He also said that HCL Tech looks better, given the fact that if you look at the valuations at 18 to 19 times 1 year forward PE, it is at a discount to the likes of Infosys as well as TCS. So HCL Tech is one stock that that could see some recovery in the second half itself, that the street was already anticipating from other IT giants as well, right?
Absolutely, and HCL Tech, that was one stock which clearly moved up in trade despite the fact that there was a guidance cut and clearly outperforming the entire IT pack. So we'll watch out for the entire IT pack, because a lot of other results from the likes of Wipro, Tech Mahindra, LTI, Mindtree are expected, and hopefully there could be some better days to come for the entire IT pack.
Well, with that, I think we've come to the end of this edition of Closing Bell. But Yatin will, of course, be watching out for the, crucial match tomorrow, and it promises to be a very high octane and high octane kind of a weekend for all of us. So, all you guys enjoy the match and come back afresh on Monday morning. Hopefully, we'll have some good news, on the Cricket World Cup front. But with that, it's a goodbye from me and Yatin. Thanks a lot for tuning in. For all your other news and updates, stay tuned to Money Control.